Hello, everyone. Thank you again for having me to this esteemed conference. I'm pleased to be here to discuss the world grain markets. Grain markets have been in a decline, really going backwards to last June or July when world central banks started to tighten interest rates. And we knew our friends in Russia and Ukraine were able to come up with a grain export corridor. So these kind of things have left to a market that's heading lower. But I think your timing in terms of looking at grain markets is correct as we get to a new growing season and volatility starts to come back to the markets. Now, as we look at the themes of the grain markets here today, and really the themes of the financial markets, we have a great economic reset ongoing where banks in the Western world, whether it be in the Europe or the United States, even in places in Latin America, are again raising rates and asset prices are adjusting. As I mentioned earlier, we have these record large Russian exports of wheat and other grains. At the same time, we have regionalization going on where we have shortfalls or will have shortfalls in countries like Argentina and Ukraine for reasons we'll discuss as we get into the meeting. So it's a new world. It's a new growing season, and there's new price risks ahead, both financially in the markets and where we see grains today. Just to kind of highlight where we think the economics are looking, we are now looking at the great economic reset that is happening due to growing inflationary pressures. World inflation has been at its highest levels in 4 decades, and gone are the days of low interest rates and what we would call accommodation by banks through quantitative easing. The big question going forward is, what is the new natural rate of inflation? Is that global rate somewhere north of 2%? We believe that it is, and that means that interest rates for much of the world will be staying higher. Now, I understand in Turkey, rates have come down for political reasons as we head into an election. They're now starting to rise a little bit, but I want everybody in the room to think globally and think about the cost of capital rising over the next 5 to 7 years. Climate has been very important to the world markets of grain. And as we look at climate, today we are seeing about twice as many climate episodes, whether that be droughts or floods, that we have seen over the past 50 years. So this catches a world that is short of grain and something that I think is going to be very important as we step into the new Northern Hemisphere growing season. Now, as I said, Russia will export somewhere between 45 and 47 million metric tons of wheat this year. That is a record. And with normal weather, we would expect them to export similar amounts, 39 to 44 million tons. So that Russian aggression on world grain trade or world wheat trade is going to act as a cap longer term. But if someone else in the world has a weather problem, whether it be Canada, Argentina, Europe, or maybe even China, this will change things dramatically. Our big concerns today are with 2 countries named Canada and Argentina. Both of them are struggling with dryness, and the weather models and trends are worrisome looking forward. So our view on the world wheat market is that lows will be in place by somewhere in the next couple of weeks. And so this is a place, if you're an end user, you want to start looking at longer term buy coverage, because the world wheat market is likely shifting to a more bullish trend. Now, somewhat new is the competitive nature of the United States, Europe, and China. This is going to cause what we call world regionalization of trade. Now, China is the world's largest grain importer and will be the world's largest wheat importer in the 2022-2023 crop year. But as we look forward, we would imagine that as China maybe looks to South America for its soybeans, or maybe to the Black Sea for its wheat, there will be more regionalization of trade than what we've seen in recent decades. And this is a significant change on a structural basis for world agricultural trade. So at the end of the day, I think what you're looking at is growing volatility in the markets. We've got this Russian war against Ukraine, which is ongoing. We've got the war of central banks against inflation. And now we have the war of Mother Nature against world crop production due to climate change. And so I'm worried that the world food markets are going to be seeing accelerated volatility. In other words, heightened volatility. And this particularly rings true as maybe the U.S. dollar declines on its banking crisis, where regional banks are in trouble and now looking, of course, at being absorbed by other banks or, of course, closing. So these all add up, in my mind, to a much more volatile commodity market than what we've seen before. So let's go through some of the outlooks as it sits today. First of all, I want to make sure that we as traders in the grain markets, as producers, understand that world stocks-to-use ratios of the major exporters are still at historically low levels. When you look at this graph here, you can see that soybeans and wheat in particular are still very low or heading down. The only increase is going to be in corn because of a larger U.S. crop potential this summer and fall. But when I stand back, and this has been overhanging the grain markets for much of the past year, is that world economic growth rates are now declining. As we look at data from the IMF, you can see here that after we made our peak last May and June, world GDP rates have fallen and are likely to continue to decline into the middle or end of this year. And then we'll see stability. With this decline in GDP, there's been a softening of global grain demand. And so that demand has weighed and caused prices of commodities like wheat and corn and even soybeans to retreat as we head into the new growing season across the northern hemisphere. All of this rise in all of this, I should say not rise, but all of this decline in global GDP rates is spurred by inflation. Inflation caused world central banks to raise rates, principally in Europe and the United States. And so after seeing a world inflation rate of 8.8% in 2022, inflation this year globally is expected to drop to 6.5% and then to around 4% next year. This would be more normal, if you will, as we look backwards in time to 2000. But I want everybody to be aware that the purpose of rising interest rates throughout the Western world is to hammer demand and push back some of this inflation that's been so prevalent as we got past the pandemic. Now, in my country, the United States, sitting here in Chicago, the rate increase has been the largest that we have seen in almost 40 years. And at the same time, you can see that mortgage applications for home ownership have plummeted. And so this is the aspect of rising rates and what really happens to economies as demand softens and the cost of capital increases. And I want to take you back a long, long ways, probably back further than we should. But what I had my team do is construct an interest rate table on world interest rates going back to 3000 BC, the Egyptians, and then taking it to the Romans and the Greeks. And it's an exercise that I wanted to do to make a point. There has only been about 37 years since 3000 BC that world interest rates came down to zero, or in some cases, Europe, a negative rate for keeping money in the bank. This is historically unusual. So as you think about the cost of capital, borrowing money or lending money, it is much more normal globally to be between 4 and 10%, with every once in a while seeing rates getting up to, again, 12 or 13%. Now, I well understand that the Turks in Turkey, you have seen rates over 13 or 14% in the distant past. But here today, what I'm trying to say is on a global perspective, I believe we're heading back to normality, which means rates will be higher than what we've witnessed for the past 14 years, and that it was highly unusual that rates stayed as low as they did. This has implications for agricultural production and trading globally, which I want to make that point that we're now going back to some rate normality. Within that rate normality, currencies have adjusted accordingly. And of course, the lira still remains somewhat depressed, but as you look at the euro, it has been the star performer so far this year, along with the Chinese yuan. Notice that the US dollar has come down sharply. That decline in the dollar is related to the US now pausing on interest rate hikes, and that pause is probably going to give additional weakness as the U.S. budget deficit from the government is now approaching $33 trillion. So we are bearish of the U.S. dollar. We think that further falls in the value of the dollar will occur. This morning, the Russian ruble is making a one-month high, but I think as you look at currency markets, this is going to play into the psyche of grain traders globally, and important will be that fall in the U.S. dollar. As I've gone back here and I plotted the U.S. dollar index against what's something called the CRB, which is Commodity Research Bureau Commodity Index. It's a basket of 28 commodities that are weighted by demand. And you can see that as the dollar goes up, commodities traditionally go down. As the dollar comes down, commodities traditionally go up. Now, there was this period after the pandemic in which both the dollar rallied and commodities rallied. But as you look backwards to 1994, notice how rare that really is. And so as you look at the commodity markets today, a falling U.S. dollar will likely prove to be somewhat bullish as to commodity prices in agricultural markets, principally like wheat and corn and soybeans. A little bit about the World Food Table. I think before we get into outlooks, we need to base ourselves into what's going on globally. The UN and the FAO put out world food pricing indexes for the globe. You can see here that world food prices have been in decline, going all the way backwards to last March. And we're now not seeing the increases that have been so predominant over the last 2 or 3 years. But notice the high level that world food prices are still holding at. So although there's been a softening in the world marketplace on food values, it's still looking at a historically high level that hadn't been tested looking backwards to 2012 and 2008. Now, world food prices or rising world food prices affects everyone differently. This is a graph plotting what the world, different countries spend on their disposable income on food. Notice in your far right corner is my country, the United States, which only spends about 6.7% of its disposable income on food. Other countries where they're much more vulnerable to rising food prices are Nigeria, Kenya, India, Tunisia, Russia, Brazil, and yes, even Turkey. And so if you're spending 20 to 70% of your disposable income on food, changes in food prices has a very big impact on families and, of course, budgeting for other activities going forward. So when you think about food prices, I want everybody to think about the disposable income that goes to food and how that might affect different sections of the world. Of course, it was about 12 years ago that the Asian Spring affected much of North Africa. North Africa this year is coming in with a very small wheat crop because of drought. So this will play importantly as we think about the next year ahead. A little bit about the world and whether we're in a food crisis or not. I went to the UN about a year ago and asked them at that point, I said, what do you determine to be a world food crisis that would have an impact on grain markets and other agricultural trade? What they came back with is that they're really looking at the kilos per person or the pounds per person that are there in what they consider to be the major building blocks of grain: corn, wheat, sorghum, soybeans, and canola. So if I look at those global stocks and then divide it by the population, I end up with a per capita measure that we can decide whether or not if we're in a food crisis. Now, again, that blue line has been crossed back in 1995, but short of that, we are not seeing a food crisis here today. We may be on the doorstep of a food crisis, but that will depend on Mother Nature and demand. What does bother me in the agricultural trade is what I would call the productivity of our world's farmers. Notice that from 1973 up until about 2017, that world farmers had always done a better job of improving their crop production and yields. Globally, we saw yields started around 2 metric tons per hectare, and now they're averaging about 3.7. That'll kind of change, though, in 2017 into where we are sitting today. So for the past 6 years, I have struggled to explain why global crop yields have stopped going up. Farmers are still farming and giving their crops almost the same chance as their firstborn son. And so I was confused by why global crop yields have stopped rising. It took me about 3 years to figure out that a lot of it was due to what we consider to be climate. So as I look forward, I think there's a new word that we all need to better understand in agriculture, and it's called heatflation. It appears that climate change and has really had an impact on heat. And as I look around the world in recent growing seasons, 2021, we had extreme temperatures throughout Canada that caused crop yields to fall as much as 40%. Then last January, we had the drier drought in Brazil, which caused the soybean crop to drop a record 20 million metric tons. Last March of 2022, India endured temperatures that were record high for the world at 44 to 46 Celsius, which caused their wheat crop to be damaged during the reproductive phase. We all remember last summer where temperatures in Europe reached up into the hundreds of Fahrenheit for London, Brussels, Paris, and Amsterdam, causing power outages and causing rivers to flow at their lowest levels in 100 years. And then recently, we've had a very, very bad drought down in Argentina, the worst drought in 60 years, where temperatures soared in February and March, and we still have yet to see a recovery in rainfall, leaving Argentinian farmers with real concern heading into a new planting period for their new winter wheat crop. So when I think about the globe, it's this incidence of heat, extreme heat, that has really caused problems for global crop yields. And I'm fearing that that will persist as we look forward to the years ahead. So if we don't have crop yields rising, the only way that we can feed an ever-expanding world, the next billion people will be on this planet by 2036, is going to be through additional acres. Notice back in the 1970s when Russia became a very large importer of grain, the world's largest, that the world brought in additional land so that we could meet that additional Russian interest. Then in the period from really looking backwards to 2005 to 2013, the world embraced biofuels, and that was the next addition, if you will, of large acreage to help the world meet the extra demand. Today, we're looking at where global yield, grain, at least production, corn, wheat, and soybeans, the three pillars of the food chain, are generally steady. So either I have going forward yields returning to prior levels of growth, or AgResource estimates that in the next 5 to 7 years, we will need to bring on an additional 23 to 25 million acres of cropland into production. This, of course, would then cause, a rise that is needed to feed the global world. Now, Europe and the United States are out of what I would say arable farmland. It would probably be the Black Sea or maybe places like Latin America that would be the growth engine of where these acres would come from. Excuse me. A little bit about the demand profile as the world's central banks have been raising rates. There's only been 3 other periods in which the world has not seen growth in grain consumption. Those years are 2012 and 13, and then 2003 and 4. Now, notice that there are not 2 years back-to-back in which global grain consumption actually declined. In prior cycles, what happened is that global demand elevated sharply. In the case of 2013 and 14, global grain demand shot up over 80 million metric tons of corn, soybean, and wheat combined. If we look back to 2004 and 5, a similar increase. I'm willing to bet that in the year ahead that we are also looking at a like increase in global grain demand. It looks to us that rising rates and pressures because of the fight against inflation pressured global grain demand down, but we're now in this position where as we look towards a new crop year, global grain demand will be expanding. Now, just to ground you in where market prices have been, what I'm using here is a chart of world FOB wheat prices and world FOB corn prices of the major exporters. Notice in the case of wheat, you can pick out your best supplier, if you will. It can be Germany or Russia, France, Baltic, Argentinian, or the U.S. And those, of course, delineate a trend that has been evident in the grain markets now looking backwards almost for a year. Notice in the case of wheat, that bearish price trend started when the grain corridor was opened between Russia and Ukraine, and prices sank as the Russians remained very aggressive exporters in world wheat trade. We now, of course, have also had a new crop that have come online in Brazil. And so when you look at Brazilian soybean production and you look at its sharp price drop relative to the United States, the chart on the right, notice that the massive soybean crop in Brazil of 154 million metric tons had a bearish impact in terms of soybean prices over the last period from really the end of February into today. Now, again, the two bearish elements of the markets today are Russia's aggressive export on wheat, and now we have the Brazilians, because of a record large crop, not having the logistical capacity to store or ship that many soybeans, and that has caused their sharp drop in basis levels as it sits there in this chart. And so when we think about the world wheat market, or the grain markets, if you will, I want to go back and show you how unusual this year has been. When I look at the spot Matif, or Paris wheat futures, and if I look at Russian FOB prices, notice that compared to last June, or almost a month from now, prices just generally slid and traded lower throughout much of that time frame. There wasn't many rallies. The market was on a continual grind lower as we look in time. And the question we should all have ourselves now is, as we've ground lower and the world's had adequacy in wheat exports and of opportunities, what does the next growing season really provide? In the same standpoint, we had too much wheat available in Europe, and so the European wheat market, this is a chart showing you the German wheat premium or discount to Russian origin wheat. Notice that after being at a discount last year in July, once the Russians started to aggressively export, the German wheat prices had to drop such that it was comparable or equal to the Russians so that they could rid themselves of their old crop wheat. So as you look at Europe and its wheat stocks, it started the year out very strongly in terms of exports, as you can see in the chart to your left. Europe was expected to resolve the shortages of wheat that were available because of the war in Ukraine and Russia. But then as we got past the month of July, it was very easy to see that our Russian friends were going to be very aggressive in exporting, and with the grain export corridor open, that Ukraine would do the same. This meant that European wheat exports plummeted, and today we're looking at where grain exports based on the 5-year seasonal will be down from what the USDA is forecasting, maybe down as much as 2 million metric tons. And so this extra supply of wheat within Europe is pressuring the domestic markets of Europe at the same time that Russia still remains aggressive in offering wheat. You can see here that the Russian ag exports, all combined products of wheat, barley, corn, and sun oil, will be record large this year at 55.5 million metric tons. And that interior Russian wheat export prices have continued to drop. Today we're looking at those prices, being somewhere down into a very cheap $120 per metric ton as looking at the Volga or Central Valleys. And so the Russian government now has started to move so that it prevents prices to farmers in terms of falling further. In the middle of March, the Russians moved to rid itself of multinational traders, with all of those major traders leaving Russia, replacing, of course, or being replaced by Russian traders of grain. And then we recently saw in a tender that occurred this week to a country named Egypt in gas, where the Russian government may have gotten involved in setting the price of that tender at $260 a ton. Again, it's early to make any comments regarding the Russian new sales program, but there's some of us in the grain industry that wonder if Russia's not establishing a somewhat of a government-controlled grain board, as used to be noticed in countries like Canada, Australia, and Argentina. We'll watch this very carefully, but it appears that the administration, the current administration, Putin administration, is getting its hands deeper into, of course, grain trading and what prices that, of course, the Russians will be selling wheat and other ag commodities at. So with that, the price of wheat, whether it's in Chicago or whether it's in Paris, have been in decline. We are now at what we would consider to be long-term support, both in Chicago at $6 a bushel and in Paris at 232 euros a ton. Now, we may have punched below this slightly earlier this week, but the markets are now recovering. So I think it's time to be thinking about a different type of market outlook, whether it's sideways or higher. I think a lot of the bearishness of the world wheat market is now coming to an end, and we'll start to see another trend develop as we get into a new Northern Hemisphere growing season. Part of that trend is also determined by the price of another grain called maize or corn. If we look at Argentinian and Ukrainian corn production that's expected in the year ahead, we come up with a forecast of 56 million metric tons. That would be down about 20 million metric tons from last year due to the Argentinian drought and, of course, the war ongoing in Ukraine. That means that wheat has now come down to a price level that is equivalent or very close to corn. With that in mind, the corn market is starting to see some pressure, but at the same standpoint, we should see some support or levity to world wheat prices. I think something else that needs to be pointed out to everyone at the conference here is that China has now become the world's largest wheat importer. When we look at data from July through February, and I can now include most of March, I end up with China taking about 12 million metric tons of wheat for the crop year. This would make China the world's largest importer, and we believe anyway, looking forward, that this is a trend that will persist. Now again, China's doing this because of the feed wheat availability for its hog herd. And so when you think about the world's largest importer anymore, it's no longer Egypt, it's likely to be China in the years to come. And you can see this very aptly on this graphic here, where you look at monthly exports of corn and, of course, soybeans to China. China has been a very quiet, large buyer of grain from the world. Again, it didn't have a lasting footprint in price, but it is something noteworthy and something that I think will ring truly as we look at coming months. The other thing worth mentioning is that we have a new champion in terms of exporters of corn. Notice that way in the beginning of this crop year, U.S. and Ukrainian corn exports fell rather sharply. Notice in blue, this is the United States. But and I look at South Africa, Brazil, and Argentina, they, of course, were the biggest exporters. Today, the new export crown of being the world's largest corn exporter is going to Brazil. That is something that we've never seen before. This has happened in the last 2 months. And so as Brazil exports 50 million metric tons of corn, it has become a powerhouse in world agricultural trade. Now, as we think about the United States, its share of global trade is in fast retreat. When I first got in this business, the United States accounted for 63% of world agricultural trade back in 1980. Today, those numbers are down at 10 and 12%. So as we think about the world in agricultural trade going forward, the U.S. is no longer the dominant player that it once was. little bit about where the world wheat market is today. As we look at world wheat crops today and we think about what's going on, we are forecasting an AgResource company that the 2023-24 wheat crop year now will fall 5.4 million metric tons from last year's record as trade yields return and we don't have the big crop in Russia or portions of the Black Sea. Very evident here is if you look at the major wheat exporters crop, not the world crop at this point, you can see that it will be sagging to about 118 million hectares with an average yield being upwards around 3.4 metric tons per hectare. This will give us a crop that will be down. And so instead of looking at a Russian wheat crop that was maybe 92 according to USDA, 104 to Rosstat, we believe that wheat crop is now going to be down at around 85 million metric tons. And then as you look at other countries, you can see that compared to last year's 404.8, AgResource is forecasting the world wheat crop at around 399 million metric tons to start the year. When I look at the major exporter supply, including carry-in stocks, we are now looking at slightly smaller than prior years. In fact, notice that when we look at world wheat exporter supply, starting in a crop year, this is beginning stocks in production, we've really seen it go sideways to 2018. When I think about global wheat exports, we are looking for it to drop about 3% this year due to the softening economic landscape that is now existing. So as we look at world wheat exports, we are forecasting it to decline around 3%. Or a modest 1.3 million metric tons. When I look at world wheat exporter domestic wheat stocks to use ratios, it is also coming down. And so when we have a world wheat market this year, even though the Russians have been aggressive in selling last year, we are still looking at major wheat exporters stocks to use ratio being near a record low. Now, as an analyst, I want to point out to all of you that if we look back in time, it's the world wheat exporters stocks to use ratio, which has been such a good and reliable forecaster of price. So this year, my estimates would indicate that the world wheat market should probably form an early seasonal low here in the month of May, based on, of course, tightening supplies as we look forward over the next 9 months. Likewise, when I look at another grain called corn, you can see here that global corn supply is up significantly from last year, 59 million metric tons, but global corn stocks to use ratios are going to be holding relatively steady, and that is something that will give the corn market pause in terms of declining much further. Part of that is because of Argentinian yields, which continue to be very disappointing. The drought in Argentina was devastating. Corn yields in Argentina would indicate that the corn crop needs to drop to around 30 or 31 million metric tons relative to today's ratio or today's estimate that is sitting from USDA at 37. If I combine Brazil, Argentina, and Ukraine all together on corn, the big three non-U.S. exporters, notice that total production and, of course, stocks will be down 23 million metric tons. That tells me one needs to be relatively careful about being overly bearish of world corn, similar to world wheat. So as we stand back and look at the major stocks to use ratios of major wheat exporters and corn, it is possible because of a large U.S. crop that corn end stocks could rise. But in the case of wheat, those end stocks are likely to decline in terms of the stocks to use, coming in at very low 12%. For now, I would expect that wheat will outperform corn on any rally that occurs over the next several months. And as we step back from the market even more and look at nominal wheat exporter stocks, now combining Southern Hemisphere, Northern Hemisphere, EU, Russia, Ukraine, and Kazakhstan, notice how those stocks, absolute nominal stocks, will be coming down. And again, if I take world wheat stocks and exclude China, who holds about half of the world wheat end stock total, Notice that we are looking at levels that we've not seen since 1996 or 2007. The message for all of you is that the world granary is relatively empty. The decline in price in recent months have been all about the aggressive nature of Russia's sales of wheat into the world market. If Russia's wheat crop ends up being 84, 85 million tons this year, I would imagine that the Russians will stay aggressive, but less aggressive than what they have done. And I imagine the government of Russia will raise price with time. Today they talk about $275 a ton as being the bottom. Lastly, I want to finish up a little bit about weather because I think it's so important to think about this going forward. I have a climate scientist on AgResource, Dr. Scott Yuknes, who helps us understand what's going on in global climate. This is not week-to-week weather forecast, but this is looking at weather in monthly time frames as we're sitting today. Today, world ocean temperatures, as indicated by the map to the right, to the left, are record warm. The world during the month of late April, May has never seen ocean temperatures being this hot on a global perspective. We also have something called an El Nino, as you see in the chart to the right, that's forming, which is only accelerating this ocean temperature rise globally. So we are looking for global temperatures to be very extreme in the upcoming summer. Hot against much of Europe and places like Canada and, of course, places like India. If we're looking where there will be risk going forward for the upcoming growing season, we see the big risk being an Indian monsoon, along with dryness across Canada and portions of Eastern and of Western Europe. So again, I don't think this is going to be the growing season that everyone in the globe has the kind of production that will continue to pressure prices, which is why, again, I believe if we look backwards in time, that maybe the world grain markets are reaching price levels where we'll either go sideways or we could have a rally, depending upon how world weather plays out. But please understand, we have never seen these kind of ocean temperatures before, which leaves forecasting of weather longer term to be difficult because this is a new environment in terms of where we are in terms of climate. With that, I want to say thank you to all of you. I believe that volatility of the markets will be ongoing and accentuated as we look over the next year of crop trading. And I want to thank you for, of course, inviting me to your esteemed conference and looking forward. And we can now take questions if you would have them.